Welcome to Finxocapital Daily Financial News, where we bring you the latest updates from the financial markets around the world. The S&P 500 and Nasdaq hit record closing highs for the fourth consecutive session on Thursday, driven by a surge in technology shares. The number of Americans filing new claims for unemployment benefits increased last week, while producer prices unexpectedly fell in May. These factors have fueled hopes of an interest rate cut by the Federal Reserve, which projected only one rate cut this year. The S&P 500 technology sector jumped 1.4%, with the semiconductor index rising 1.5%, both reaching all-time closing highs. Broadcom's shares soared 12.3% after raising its revenue forecast and announcing a 10-for-1 stock split. Nvidia rallied 3.5%, and Apple ended up 0.5%. According to Paul Nolte, senior wealth advisor and market strategist, it's still very much a tech story. On the floor of the NYSE, the Dow Jones fell by 65.11 points, the S&P 500 gained 12.71 points, and the Nasdaq Composite rose 59.12 points. Adobe's shares jumped over 14% after exceeding revenue expectations for the second quarter. In Forex news, the yen fell to an over one-month low after the Bank of Japan decided to continue its bond buying program. The euro, amid political turmoil, was headed for a weekly loss. The dollar strengthened, driven by gains against the euro and safe haven bids. In commodity markets, OPEC does not see a peak in oil demand in its long-term forecast and expects demand to grow to 116 million barrels a day by 2045. Markets, OPEC does not see a peak in oil demand in its long-term forecast and expects demand to grow to 116 million barrels a day by 2045. The IEA, on the other hand, projects oil demand peaking by 2029 and leveling off towards the end of the decade. That's it for today's financial roundup on Finxocapital Daily Financial News. As markets continue to navigate through economic data and geopolitical events, we'll keep you updated with the latest information. Thank you for watching. Stay informed and manage your risks wisely.